Okay, easy. So now essentially we're here. We need to understand what is the purpose and the nature of the current 4 hour. So if I look at this very carefully, I'll say the following. I'll say that price was in a downtrend, making lower lows and lower highs. Price then formed a change of character to the upside, and when the change of character had taken place, that is essentially your confirmation that the 4 hour time frame has shifted bullish. Price then puts in a higher low, higher high, higher low, higher high, higher low, and finally a new higher high. So at that present moment, we are ranging from this low right here and this high right here. So with the understanding of that picture, you'd be expecting something like a pullback into this level and a continuation higher. However, that didn't happen. We actually had a change of character back down. So the change of character down was the confirmation that the 4 hour time frame had shifted bearish. And so after it shifted bearish, what we're expecting? We're expecting this high, lower low, some form of higher low, some form of lower high, and then a lower low. That's essentially what we were looking at. We also had this area right here for areas of supply. Yes, we did wick just above it, but I see that as just a run on the buy side liquidity. With that being said, and you've formed your 4 hour understanding, you can now drop down to the 15-minute time frame, because this is where everything important is. So this is essentially the picture you have. We have the CPI news event, which was this, but up until then, price was essentially bullish, right? Making higher highs, higher lows, higher highs, higher lows, and higher highs, until price eventually didn't shift here, because that right there is just a wick break. And a wick break isn't a change of character, that's just a run on liquidity. So the real break happens here. So this is where price makes a change of character. At that point, we now know the 15-minute time frame is bearish, aligned with our 4 hour. That is when we can really start looking and getting into the market. With that being said, now we have, this huge, because price was so momentous to the downside, we're currently just ranging really from, the current high all the way up here to the current low, which is all the way down here. And none of these are really worthy of pullbacks. I mean, honestly, maybe you could say lower low. However, it wasn't a lower low because it didn't break and close below the low. Therefore, this is still the high. With that said, you'd be looking at price to range anywhere up in this region before having a shift to the downside. So few point of interest before we can essentially then look to get back on the lower time frames. I personally would be looking at something like this buy to sell right here, which gets liquidated. This overall buy to sell. And then if that didn't hold, I'll be looking at this overall area, this range created area of supply, maybe even just something like this range created, a buy to sell. So those are 3 points of interest. And essentially what you're looking at is when price gets into those levels, does the 1 minute realign with the 15 minute, which is bearish? Because right now the 1 minute will be seen making higher highs and higher lows. So what I will say is we have huge sell side liquidity in the form of a trend line, which is always important. To see this corrective pullback shows us that price is likely to go lower. With that being said, then we jump onto the 1 minute time frame. Now on the 1 minute time frame, essentially what we see is price make its way up whilst being bullish, right? Then we have this internal range, higher high. So price was ranging from high to low, right? Super simple. When price broke the low down here, that is what we would know as a change of character to the downside. Now, being totally honest, here is a place that I would look to get into the market, and I would target where? I would look at targeting the 15-minute lows down in here. But here's where it gets interesting. Because the first trade, and again, people ask me all the time, do you lose trades? Of course we lose trades. It's just about managing risk and reward. First trade, tagged in, stop loss. Okay, so if you look closely into the 1 minute market structure, you will see a series of pullbacks. You'll see essentially a low, high, pretty much equal lows, and then higher high, higher low, higher high, pullback, higher low, higher high. So when this area of demand right here gets broken, that is essentially where we will be expecting a change of character. So that is our first inclination that price has shifted on the 1 minute to match the 15 minute, which is bearish. And so just taking, the origin area of supply that caused it, although it does look a little bit scary, it makes total logical sense. With that being said, you want to cover just above the highs, which is a 1.8 pip stop. I would rather leave, a little bit of room for breathing at a 2.5 pip stop, especially when it comes to things like spread. What I would then be looking for is, of course, this low down here to be taken first. And that would be our TP number 1. And then from there, I would really look at taking out all of the areas of liquidity that lay down here on the overall swing external. That's why we pretty much always have 2 take profit levels, is because the first take profit levels is going to be what essentially ensures, we're taking money out of the market. And then the second take profit, which is usually around about 20% of the position, can then be left on to, let your understanding of the markets play out to a better level. So, and then you're essentially just going to watch how this trade would then play out. As you can see, price tags in and then moves. And at this point, when we have the break of structure right here, I would be moving my stops to break even. Now, there is a couple of different places you could get back in on the way down. As price pushes up, reacts to the area of demand in here, pushes up, and then has the pullback. You could look at getting involved, if you didn't get involved here, in this overall buy to sell range, and the stops, entries at the lows, stops just above the highs, and then look at getting in there. So guys, with that being said, I do want to let you guys in on a little something. We've just opened up a few additional spots in our premium level mentorship. All the links to that are found in the description down below. I hope you guys enjoyed the video.